Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is miscellaneous sports trivia. All right. Now, today's special guest is Saurabh Shah. The name of his company is InstaLend, and we're going to get into a little bio here. So Saurabh is the co-founder of InstaLend Corporation. He's a keynote speaker, and InstaLend was recognized as one of the fastest growing companies in the U.S. for 2022 and 2023 as part of the Inc. 5000 list. Saurabh was named as a rising star by Housing Wire in 2023. InstaLend has empowered thousands of real estate entrepreneurs to access capital that allows them to redevelop neighborhoods. Hey, Saurabh, welcome to The Best of Investing.
Hey, Ed, it's good to meet you here.
Edward,
Thank you.
yes, I do, and I do use Edward. Okay, all right. So first of all, tell us, what does InstaLend do?
So InstaLend is a private lender. We empower real estate investors to get financing, to go out there and purchase real estate from an investment perspective. So if you have your primary home or you may be renting and you're interested in getting some exposure to real estate, you want to go out there, buy a property, fix it up, and then flip it, which is what we typically call as a fix and flip deal, or you want to buy a property and just hold on to it for a rental. The most important thing to close on these deals is financing, and InstaLend is your financial partner.
Okay. And would you be considered an alternative lender then?
Yes, we are an alternate lender to banks and credit unions.
Okay. And so primarily you're looking at fix and flip lenders and people who are looking for, let's say, longer term rentals.
Correct.
Okay. Question would come up now. Generally, what rates do you charge your borrowers?
So for fix and flips right now, seeing the rate cycle peak out over the last 18 months, we currently are between 11 to 12% for the year. And this is interest only, short term for up to 12 months. There's no prepayment penalties. And on the longer term 30-year rentals, our rates start at 7%. And we offer different pricing options. We can do a fixed rate, we can do an adjustable rate, and interest only. So depending on what pricing works best for you.
And how many points do you charge up front?
Up to 2. So we don't charge anything up front, just to clarify.
Okay.
When I say upfront is what I mean is when we take in a file, we have no fees. So there's no application fee, there's no points, none of that. The day we close the loan is when we charge our points on the HUD, and that's up to 2 points.
Okay. All right. So generally you're going to be on a first mortgage, 11 to 12% and up to 2 points on a fix and flip.
Right.
And on a long-term rental, roughly you're looking at 7% and then also plus roughly 2 points.
Correct.
And how long a term is that longer term loan? Because the first one's only about a year.
The longer term is up to 30 years.
Up to 30 years. Wow. Okay. Now, are you a portfolio lender?
We also do portfolio loans. So if you have a bundle of assets, either for acquisition or a bunch of rentals you own, and you want to just pull some cash, do a refinance, we can roll it up.
Actually, let me interrupt you. What I meant was, when I say a portfolio lender, I mean you're holding it for your own portfolio rather than selling it to another lender.
Oh, sorry. On the fix and flip, we do try to keep it with us. On the longer term, we do securitize it. It's just that it's more patient capital, and we want to make sure that our capital is back available for deploying on new loans.
I was going to say, patient, because it's 30-year paper, and it's right now 7%, kind of about what the market is for the big banks.
Mm-hmm.
How long does it take for underwriting for your loans?
So
as a borrower,
underwriting is typically within 48 hours if we have an appraisal report. So that's a breeze, and that's mainly because we are no doc. So we don't need to qualify you as for your income. We don't ask for tax returns or pay stubs or W-2s. We are asset based, so we just need an appraisal done. And
so you're not doing any owner occupied consumer bridge loans. It's any owner. It's got to be a business purpose.
That's right.
Gotcha. Okay. Tell you what, we're going to go to our first break. It goes kind of quickly, I know. All right. So, our first trivia question here is, and we're talking different sports trivia. So, this is a baseball question. Which player is the only one to hit 2 grand slams in one inning? All right, that's our trivia question. Call 888-912-1190. The first caller with the correct answer wins the tanning certificate, which is worth about $100. So that's a pretty nice little prize we're giving away. Again, trivia question number one is, which baseball player, talking Major League Baseball, is the only one to hit 2 grand slams in one inning? All right, we do want to make a mention here before we cut to break to for Transcendence Theater. I've gone to some of their performances. They're awesome. It's like having Broadway here locally. Check them out at bestnighthever.org. All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We are going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with my special guest, Saurabh Shah. Our first trivia question is, we're talking baseball here on this question, which baseball player is the only one to hit 2 grand slams in one inning? Saurabh, I don't know if you're a baseball fan. Do you know the answer to that?
I wish I knew, but I think I'm gonna kind of have my ear on the phone to see who on your audience gets it right.
Okay. Well, the answer is Fernando Tatis.
Okay.
So that's the answer to that one here. Okay, so we are on Zoom in the studio, so to speak, with Saurabh Shah, who is from InstaLend. Do you guys have funds, or do you just do individual loans? In other words, do you have a fund that you raise money for that does the lending?
So we already have committed capital, but we deploy property specifically.
Okay. So you have individual investor clients who like, where do you get your money from?
Right. So it's not multiple individuals. We have actually gotten a couple institutional partners from Wall Street.
Oh, wow. Okay. How much money under management do you have?
Right now we have about 275 million.
Oh, 275 million. Okay, very good. How long have you been around?
5 years.
5 years. Okay, that's very good for 5 years on that. Okay. With the let's see here. Okay, there's no prepayment penalty, which makes sense if you're going to be charging points up front, because it'd be terrible to have no prepayment penalty and then just, get paid back in a month, for someone who does a fix and flip on that. Okay. And the question, why is there a need for your business, the people who are coming to you versus going to the bank for money?
Sure. So the underwrite between a bank and us is very different. Banks will qualify you at an individual income level. That means, they're going to be a little more slower because they want to make sure you have enough personal income to cover the mortgage and the payments, and then whatever residual buffers. So the process is about 2 to 3 months. And depending on what your personal income is, it limits the number of loans you can do with them. As an alternate lender, we focus only on assets. We don't look to qualify your personal income. So you could do 1 loan or you could do 100 loans. We make the loan out to your business entity as against making it to your individual name. So these are structured as business purpose loans, and we typically close in 10 days. So
that's what I was going to ask. So you can close these in 10 days. I mean, a lot of times it's hard to even get anything through escrow that quickly, with title insurance and all that. So that's pretty impressive. You can do it within 10 days. What loan to values do you do for fix and flip, and what loans to value for your rental loans that you do?
So if you're an experienced investor, on fix and flips, we'll finance up to 90% of your purchase and 100% of your rehab.
Really? That's great. Okay.
And this is for 1 to 4 units. But if you're doing anything which is 5 units or more, then we'll finance up to 75% of the purchase and 100% of your capex or value add. On the long-term rentals, we'll finance up to 80% if it's a buy and hold, and 75% on a cash out.
And how, excuse me, what is your default rate?
So right now we're somewhere just below 2.5%.
Wow, that's okay. That tells you how good your underwriting is.
Yeah, I mean,
yeah. Well, I mean, think about it. If you're doing, let's say, on 90% of purchase and 100% of the costs for the fix and flip, no one really knows what that builder is going to do, and he may just walk away. So,
So the way we mitigate is the rehab funds, we don't give it to you at closing upfront, right? The rehab funds are held back
yeah,
in an escrow, and then we release it to you
correct.
as and when you finish your work. So at every point
Yeah,
in time, we're making sure that the debt to equity ratios are maintained. And
yeah.
answer your question about the risk of someone just taking those funds and running away, right? That doesn't happen.
Yeah, I was going to say that at that point, they're only losing their 10% that they put up and then all their sweat equity.
Yeah.
So that's still pretty good. I was always told never give anyone a job, so to speak. But no, but you gotta have a lot of good underwriting. Do you lend all over the country?
Yes, we're nationwide except for the Dakotas.
Okay. Really? Is it because of the foreclosure laws there?
It's
Or
it's basically we don't lend in rural areas. And
okay.
also, from a regulatory perspective, you're required to maintain a brick and mortar presence. We're completely
Ah,
digital, so our loan intake to sending out your terms to processing, underwriting, everything is digital through our portal, and
okay.
that kind of helps us stay efficient and lean.
How many employees do you have?
So we have a bunch of outsourced employees. So
Yeah.
our processing team, underwriting team, and our legal team is outsourced.
Okay. Yeah, because like when you do the construction draws, you have to have somebody who is knowledgeable, on site to be able to check off, yes, the electrical's done, the sheetrock's done, et cetera.
Right. So
Right? You outsource all.
So technology really comes in handy. What we've done is, we have the ability to send you a unique mobile link where you can do self
Okay.
inspections. So you take pictures and send it back to us through a portal,
Ah.
and that is geo tagged. So that's how we verify that hey, this is your property, this is the work you've done, and that's when we release the draw for rehab.
Yeah, you don't go to the guy doesn't go 2 doors down the house, take pictures of a brand new house and go, yeah, look what I just did. All right, we're going to cut to our second commercial break here. It's good stuff here, Saurabh. All right, second trivia question. This is another baseball one. Out of the 8 original baseball teams in the American League, which team has never used a name that was previously used by a National League team? And I'll tell you that they are still in existence, and they still have the same name. So it's been like that for over 100 years. All right, call 888-912-1190. The first caller with the correct answer wins that tanning certificate. Don't touch that dial. We're going to be right back. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Saurabh Shah, my special guest from InstaLend. Second trivia question, which was another baseball one. Of the eight original baseball teams in the American League, which team has never used a name that was previously used by a National League team? And this team has been around for over 100 years. And I think many times they've kept the same uniform and the same name and everything, same city. Any idea?
I'm lost.
No, so it's okay. It depends on my guests. Sometimes the guests know, and sometimes they don't. The Detroit Tigers. They've kept the same, pretty much same everything the whole time. All right, want to make a mention here for Diversified Mortgage Expo that's happening next week. I am going to be in Tennessee if you want to come meet me. All right, let's see here. So you do nationwide, and let's see. Let me do. How do you see real estate performing as an asset class?
I mean, real estate is the only tangible touch and feel physical asset one has recourse and collateral to, right? And
Yeah.
if you just look at the macros, there is a fundamental demand supply mismatch. So there's always need for more
Yes.
housing, which we've been trying to solve for a couple of decades now. So from that
Yeah.
perspective, as an asset class, has been performing just amazingly well. You look at housing coming out of COVID, prices have gone up, rents have gone up, which means you need to put out more housing stock to keep it affordable. So to
Yeah.
put out more housing, you need more
Yeah.
financing to be able to go out there and buy more houses or start building ground up.
And do you see that changing in the next 5 years or 10 years?
I mean, I definitely see more investors, switching from just fix and flips to build to rent, or build to
Okay.
sell, which means they're going out there and buying land and then building new houses. And that's been the new
Okay.
focus area for us. So that's a very noticeable change we've seen in the last 6 months or so.
Gotcha. And I guess depends on where you're at. I'm in California, and even though they talk about housing, it's amazing how difficult it can be with permits and the NIMBYisms and all that. Where are you located?
So I'm based in New York City.
Oh, okay. Well, New York's also got its challenges with permit processes and all the regulations and red tape and with all the. I mean, it's so funny how. I'm not sure which governor is worse, Holcomb, Hochul or us with Newsom. We call him Gruesome Newsom. Um, it's like they're both destroying the states. Do you? Do you see the politics of New York changing much or having a big effect on your business?
I mean, I feel like we've reached a time and a point where it's going to be progressive politics, because this is the biggest mandate, and it's an open mandate all the time, to solve for housing
Yeah,
and to solve for affordable housing. Uh, you see Section 8, you see everything else that comes along. But there is a need to put out more housing. And if you want to continue being in politics, you have to solve for this.
that is true. I mean, what were they talking about? Asking residents to open up their houses for migrants. So, okay, I don't know how many people are willingly doing that. I'm sure there's some. Probably not enough to take the 15 million people that have come in, but I'm sure that definitely there've been some. Uh, So how can people participate in developing distressed properties while profiting from the same?
I mean, typically as an investor, you always make your money on the buy. So when you
Yeah.
know it's a distressed property, you're buying it at a discount, and you know the kind of work, the scope of work you need to bring it up to market value. So as a lender, we typically want to make sure your purchase price at the minimum is what the as is value is. You're not overpaying and making a premium on the purchase. And we also
Okay.
look at comps on what happens once the property is fixed up. Where are they selling at in the last 6 months within a 1 mile radius. um, and then we also look at market rent, because a lot of the times you want to hedge your exit. If the market's shifting, you can't sell it. You at least want to bring in a
Yeah.
tenant and start earning cash flow, so you can then refinance into a 30-year loan.
Yeah. And with interest rates the way they've been, you've been around for 5 years, so I got to think that your rates instead of 11% were probably closer to 8 to 9% some years back, weren't they?
Yeah, we were doing fix and flips at between 8 to 9% about
8 to 9%.
before the
That's what I thought.
pandemic.
How often? How often have you had to file a foreclosure?
It's been a couple times, and it's also very state specific. There's judicial
Yeah.
versus non-judicial. So we try and stay active in the non-judicial states where foreclosure is easy.
Yeah.
It's lender friendly.
Yep.
But if you're in a judicial state, then yeah, it can take a couple weeks to a couple months. But yeah, I
Yeah.
mean, it's something that is a part of business. We have our legal team that works on foreclosures. So that's, yeah, it's a part of business.
And when you've had to foreclose, has there been like in the middle of a rehab?
It could be for multiple reasons. It could sometimes be for a midstream rehab where the property was abandoned, or the borrower fell behind in terms of timeline and has not yet finished rehab. Or it could be in a
Yeah.
situation where all the rehab is complete, but the borrower has not been able to achieve an exit.
Yeah, because unless they can refinance at a cheaper rate or just refinance at all, do you sometimes extend the loans?
We do. All our fix and flip loans come with minimum 2 extensions of 3 months each.
And how much do they pay for that?
About a point.
About a point. That's about normal. All right, we're going to cut to our third trivia question here. Now, this one actually is a hockey question. I don't know how much you know about hockey. All right, name 3 hockey teams that don't end in the letter S. Like the Sharks. That ends in S. So we're looking for 3 hockey teams that don't end in the letter S. Call 888-912-1190. The first caller with the correct answer wins that tanning certificate. Really quickly, Saurabh, how do people get a hold of you if they're interested in learning more what you do?
The best way to reach out to us would be to just go to the website, which is instaland.com. And you can reach out to us through apply for a loan or request a pre-approval. It usually, we get a response back to you the same day.
Very good. All right. Stay with us. The Best of Investing will be right back. Don't touch that dial. Welcome back to the Best of Investing. I'm Edward Brown along with Saurabh Shah. Our third trivia question. This one was a hockey question. Name 3 hockey teams that don't end in the letter S. Do you know any hockey teams?
Yeah, I think maybe I could get this one, but I'm not sure if I have the right names. I think we have Miami Heat.
That's basketball.
Oh, sorry.
So that would be a good that would be good for if we were talking basketball. This is going to be for hockey.
I guess then I would have to defer to your audience.
Okay, the Tampa Bay. I know I hardly ever cover hockey. Tampa Bay Lightning is one. The Colorado Avalanche and the Minnesota Wild. So those were our 3 teams that we were looking for. I don't know if there's any others. All right. So I do want to talk just a little bit about what Pacific Private Money is doing. So interestingly enough, we sort of do kind of similar to what your company Instalend does, but our main focus is the owner-occupied consumer bridge loans. And we've gone almost nationwide at this point. We primarily focus in on California, but we definitely have done loans outside of California. And we're only one of a handful of companies in, let's say, California, who are licensed to do these owner-occupied consumer bridge loans that are considered alternative financing. So again, you go to Wells Fargo, and if you need a loan faster, or you're 2 points lower than what they want, and they deny you, then you go to Pacific Private Money, and they can generally lend you the money. Where I think they're keeping their rates they're keeping their loan to values at about 65%, and they're short term, they're 11-month loans. But the best part is the borrowers can get the money pretty quickly. Again, same thing, within a couple of weeks usually. Depends on how quickly the title companies can close. And usually what happens is people put up their current residence as collateral if they have a lot of equity in it. And then they don't have to put up too much cash to buy their next house. And Pacific Private Money does what they call cross collateralization. So they'll be a first or a second on their current house, and then a first mortgage on the first house, or excuse me, on the target house. And then there's no prepayment penalty. Same sort of thing. The rates are higher than the bank, but most people are happy just because they can get their dream home, whereas they ordinarily wouldn't be able to do that. They do some fix and flip, but not too many. So it's kind of nice that they don't compete with Instalend. And you said you've been around for 5 years, and you've got a couple $100 million under management, which is phenomenal. So what do? You just constantly? Oh, but let me go back. So for people who are interested in the owner-occupied consumer bridge loans, as a borrower, you just go to pacificprivatemoney.com. And then they also have their Freedom Fund, where they pay their investors anywhere from 7 to 10+%, depending upon how much they invest. And it's not tied up. They're hoping people kind of stay in for a year, because that kind of makes it a little bit easier to manage. So again, go to pacificprivatemoney.com. You can go to the invest page. So Saurabh, when you get outside investors to invest with you, are they investing in an individual deed of trust, or are they investing in your fund, or do you have a fund? And then what do you pay them?
So it's more of a fund model. And we have our own box which we adhere to make sure these deals fit the box. And it's basically on the overall portfolio level, we have a hurdle rate that we want to achieve, and then whatever is the alpha we generate on that in terms of the spread.
Okay. So if I were an investor, and is it like a 506 fund? 506 Reg D, or?
No, it's just one or two institutions. So I think what you're referring to is the pooling of capital, sort of.
Yeah. So if I said, hey, Okay, so I don't invest with your company
Correct.
because your money is coming from institutions.
Right.
So really what you're doing is you're like for being on my show, you're looking for potential borrowers
Exactly.
who are saying, "Hey, there's a great company out there." That's interesting. Most companies who have come on the show, they're actually looking for capital as well. But it's very interesting. You already have a one big backer.
Yeah.
That's like, and well, how much does that backer earn? The big institution, what do they earn?
So it for any deal, it's anywhere between 200 to 300 basis points through the life of the loan.
Okay. Okay. Not too bad. Kind of typical. I mean, it's great. How did you end up getting the? We've got about a minute to go. How did you end up getting the institution to invest with you?
So I have a background in Wall Street. I was an investment banker, and then I worked in real estate private equity. So I had some relationships, and before I started Instaland, I was also flipping homes. So I was actually one of the borrowers who would go out to a bank, try and get capital to buy properties, fix them up, and then sell them. And I saw, the gaps for, institutional color of capital to enter the space. And that's how we went out there and, got this pool of capital, this color of capital, which currently we are lending to individuals who want to be flippers.
Gotcha. It's kind of a nice place to be because then you don't have to go out there pounding the pavement looking for capital.
Yeah,
it's right there for you. Yeah.
You're always going to grow the book, so the buck never stops.
Yeah, no, that's great. And I presume you have repeat borrowers, because your rates are pretty good, especially with the high loan to value that you're willing to lend.
A majority of our business is repeat borrowers, so it's a very sticky product. Our customer acquisition cost is only for the first loan, and the lifetime value of our customers ends up being infinite for us because usually if you're not flipping, you're buying homes to hold on to these as rentals. And when they come back for that refinance, that's the second loan for the same client.
Gotcha. Okay. Do you look, you know what? We have to get to our last commercial break here. So stay with us, audience. The Best of Investing will be right back with some closing comments. Don't touch that dial. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest from InstaLend, Saurabh Shah. We didn't have a trivia question, but Saurabh, why don't you give us a general real estate outlook? What does your crystal ball say for the next few years? Especially with, the election coming up, who knows?
I mean, listen, at this point, for anybody to have a crystal ball would be challenging because we all thought this was the year where rates would start coming down, but we haven't seen even a 25 basis point reduction. It is the election year, so I do anticipate rates to kind of start trimming off closer to the year. And my outlook for real estate is I've always been bullish. I've always, stressed. I can't stress enough on the fact that when you have a demand supply gap, a mismatch, when you're always trying to catch up with the demand, you will have takers. And housing is a very fundamental need. It's something that's very basic. Every individual needs.
That's what I've always said. Everybody needs a place to live.
Exactly. So we're bullish, and we're through COVID as well. We've seen how individuals have migrated out of cities into the nearby suburbs or any other tier 2, tier 3 to get more housing. And once you're in a bigger house, to downsize is more difficult. So just kind of tying into how professionally things have changed. Hybrid work is here. We're not seeing remote. We're not seeing in office, but we're seeing hybrid. Like how we have this call right now on Zoom. I have people
I was just thinking that,
2 days a week, 3 days a week. So housing is going to be here, and people are going to need more and more of that. So we're pretty bullish, and we're actively seeking out more investors who we can make these loans to, either to buy, to flip, or just do a ground up new development.
Very good. All right. Tell us about a success story, if you have one.
For my clients or for myself?
Both.
I mean,
we have a little time here.
So for me, it's interesting because, like I said, I started out flipping houses myself. So I'm based in New York City, but the first house I flipped was in Chicago. So that's completely out of state. I had to go out there, hire a GC, hire a realtor, make sure, my work gets done in time, because the bigger challenges that you run into when you're not physically at the house is you can have cost overruns, you can have delays. So completing the project in time is crucial. because as you see, right, I said the rates right now are between 10 to 12% on fix and flip loans. Carrying that interest amount each month can eat into your profits if you have any sort of delays. But touch
Yeah.
wood, things worked out well. I did one, I did two, I did three, and then I flipped houses in New Jersey. So I would say that was a good launching pad for me, because without that success, I would have never thought of taking this next step of going out there and starting Instaland.
Yeah.
And I've been able to take my experience and marry that, bring that to the table with all the clients, all our borrowers who work with us. So that, seeing them successful, seeing them exit projects is, I take pride in that success as well. And
How many deals a month do you close on average?
typically 30 to 40.
Wow. And what's the average size?
Average size is somewhere between 250K.
Okay. I mean, because that's a lot of underwriting for that many loans, to do a loan a day.
Yeah, that is true.
Yeah.
Yeah. I mean,
Yeah.
our focus really is to make sure we bring a net positive impact at the community level. We are looking to
Yeah.
change neighborhoods. So the faster we can
Yep.
work, the more loans we can do, the more housing we can kind of help put out there it's our goal at this point.
Very good. All right. Saurabh Shah from InstaLend, thank you so much for being our guest. And we're going to go to our thoughts for the day. So here we go. So I never make the same mistake twice. I make it 3 or 4 times just to be sure. And Pablo Picasso said, I'd like to live like a poor man, only with lots of money. Very wise man, that guy. All right. Wait, no, Van Gogh's the one who cut off his ear. Picasso. It's funny. I saw Picasso's paintings. I don't know if anyone's known this, and I'm trying to remember if it was in Barcelona or where he was from, but his paintings, his drawings and stuff when he was like 14, 15 years old are phenomenal. I think he ended up taking a bunch of drugs later on and getting all in all that kind of psychedelic weird stuff. But anyway, audience, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.